All right. All right. So it looks like we're live with Vance Harwood. Thanks for coming on, Vance. Great to see you.
Sure, no problem.
What a crazy event that happened yesterday and Friday.
Yeah, no, it really has been.
What's your first impression of all this?
Well, I think the thing that was most surprising to me is that I looked at the market at around 3:30 Eastern time, and I think at that point the VIX was up about 75%, and the VXX was .IV. So that's a pretty good indication of the kind of standard index that a lot of these funds track. It was up about half of that, or actually less of that, about 30% of that move. So I don't remember the exact percentage, but I think VXX at that point was up about 25%. And the vol funds were, the short vols were down about that same amount, which would be what you would expect. And then going into close, there was just a huge move in the VIX futures. And this caused a cascading sort of event in the last hour of trading.
Yeah, I saw after the close, we had the XIV and SVXY really just fell apart. And we were struggling to get information right then because, but the information we were getting was that it was margin liquidation. So, for example, somebody who had an account who was heavily margined, I think you can do 60% margin, at least some people could on XIV. And so people that had done that and their accounts had gone negative, their brokerages forced them to liquidate. And that's what caused that huge sell-off where we saw XIV and SVXY go down to $10 right on the close.
So I think one point that I think confuses a lot of people, and that is we talk about close. So when people talk about close, they're normally thinking the New York Stock Exchange close at 4 p.m. Eastern time. Well, it turns out that that's not a close for the volatility complex. So since they're all tied to the VIX futures, they are tied not to an exact time, but actually to the time that the VIX futures settle. And so in a normal day, that settlement is around 4:15, 15 minutes later Eastern time. But if things are messed up, that can be later. So for example, I saw one chart on Twitter. It looked like there was this huge volume spike right at 4:24 Eastern time. So my sense is that's probably when the futures settle, and then the big volume spikes were the trade at settlement order type that we discussed in the last meeting, where basically you can put in orders before the close saying I want to sell a certain amount of sell or buy a certain amount of VIX futures at the settlement price. And so I think that was obviously a huge volume spike yesterday.
Well, people were looking for some sort of indication in the futures trade. And first of all, thanks for correcting me on that, because I was sort of saying that wrong. I was talking about the 4 o'clock close versus the 4:15 close. We did see SVXY, I believe, halt for a little bit at 4:07, which would still be technically in the open day for stuff. But people were looking for some kind of indication in the futures for whether there had been an acceleration event in XIV. And the thought process for them on that particular thing, I think, was that if they were thinking that they would have to settle it right then if it were accelerating, and therefore have to kind of buy in all their shorts at that particular moment. As we found out today, when we did get confirmation that XIV will be in an acceleration situation, they set a day far off in the future so that can be very orderly settled.
Right, the 15th, yeah.
So how does that work as far as what price, how do they figure out what the final price will be? Will that be figured out on the 15th?
Well, this is speculation on my part, but since XIV is an exchange-traded note, they're not like an ETF that actually holds the VIX futures themselves as a hedge. So, they, in their prospectus, they can do all sorts of things, but it seems most likely they use something called a swap, which is an over-the-counter instrument where you basically have a counterparty, which would typically be a large bank or a large financial institution. And so it's essentially an over-the-counter contract that Credit Suisse would want in exchange for creating shares. And there's almost certainly verbiage in those swaps that deals with this termination event. So I think what they're having to do is they the swap providers, they might have positions they're closing out, and they might prefer to do that in a less chaotic business environment. So it's certainly possible that they're playing the mean reversion trick and saying, well, if we wait a little longer, we can get a much better price. Well, even waiting till today, they would have done much better than at 4:15 yesterday.
Yeah, that was my sense as well, that we should expect to probably see a price somewhere in between where stuff is trading today and some sort of higher level, like, for example, where it sort of opened yesterday, for example. So because a lot of people, they're long XIV right now, and they're like, what's going to happen, and what should they do?
Well, I think that, on the high end, I'm just saying I'd be surprised if it's more than 20% of what XIV closed on Friday. So I think if they're hoping they're going to be made almost whole, I think that's pretty unlikely. So, but I don't think it'll be as low as the settlement IV price, which I think was $3 and something yesterday.
Yeah.
So yeah, I don't know what XIV was trading. Was it up around 100 and mid 100, 105 or something, kind of in that range? I don't remember where it was, but it was around 100.
We can pull up the chart right here. So
yeah, I would be surprised if the acceleration value is much higher than $20.
So it at 4 o'clock yesterday, it was trading $99.
Okay, so but that was about well, at 4 o'clock that.
Okay, if I go back a little bit farther, then let's look at all of yesterday, for example. Let's see. So yeah, so yesterday it opened around 109 and change, and traded down to 99 on the close before the close. I'm sorry, not the close. The close of at 4 o'clock, and then it just started to tank from there. I don't know. Can you see the chart?
I can, but that's fine. That's. I know SVXY and XIV were trading pretty close to each other, so that seems very reasonable.
And as far as some people had questions on the options, and this kind of operates, I don't know if this is going to help anybody, but this kind of operates like a cash takeover deal, in that all options will go to their value. They'll go to parity, whatever their intrinsic value is on the date when this is pegged at a certain price. So if you're long puts, they'll be you can use that final price. I think most people are long calls that are going to end up worthless, but
well, the XIV didn't have any options. So,
right. Okay, that's
so
good. Sorry.
And somewhat surprisingly, SVXY did survive, and it looks like their option market is working well. The options market looks like it's working well since they resumed trading. So. Yeah, that the options thing does get complicated, but as you say, that's kind of a cash takeover sort of thing. You have a price, and they get settled to that.
Well, I apologize. I did mess up that one. This is one of the hazards of going live, is that my research isn't perfect, and I was thinking XIV had options, but obviously it doesn't. Yeah, SVXY still going. What do you think? What's going to fill the vacuum of XIV here? Are a lot more people going to go to SVXY? Are people going to go into something like a VMIN?
Yeah, I don't know if VMIN survived. There were some trades early this morning, but then it stopped trading, it looked like. So I don't know if they terminated or not. So It's
I've heard rumors that it has survived, but we don't have any confirmation either way yet on that
okay.
one.
All
Yeah.
right. So the biggest advantage of XIV, I think, is its tax treatment. Is that you don't get into the K1 sort of treatment, which is sort of a pain. You're into. It has advantages also, but that's the main advantage of XIV, in my opinion. So whether Credit Suisse will, they certainly could, and it has been a good product for them. But I think the fact that they did terminate it and SVXY didn't gives another reason to choose SVXY over XIV.
So I'm anticipating that that we will see. There's a lot of bad press on the VIX trade right now, and I'm anticipating that we will see limited customer paper moving forward for at least some period of time after this move.
Mm-hmm.
A lot of people have gotten burned, and
Mm-hmm.
and it's been pretty scary. We did talk when you came on about this sort of thing possibly happening though, and
Mm-hmm.
it's pretty amazing. Do you think volatility will stay elevated for a period of time?
Well, when you have a shock of this magnitude, we had a record VIX spike of 100%, and so a fair amount of fear. So this isn't like these 2-day blips we had in the last year and a half. I think this will take a little longer to work through the system, and we could see some more down legs. But when I look at the macro, the thing that triggered the initial blow off, I think on Friday, was that inflation was higher and jobs were fewer people unemployed. So it wasn't exactly disastrous news economically. So I expect this to be a relatively short. We're in backwardation now, but I'd be surprised if we're in backwardation for a couple of weeks unless we really go into a full-blown correction.
Let's talk about the term structure just for a second here. It's kind of in the shape of a smiley face right now,
Mm-hmm.
sort of. And obviously the spot is way above the futures right now. Right now I show spot being around let's see, 37.86, or it's moving around, but and the futures 26 and 21.6. So really inverted, basically the opposite of what it usually is.
Right. Mm-hmm.
So if somebody's trading UVXY, is there a ton of pressure because of this to the upside now?
It's definitely the tables are turned. So the long vol products, when you're in backwardation, you have a tailwind. But it's the other factor is that you can have volatility collapses also. So UVXY or whatever, if the futures drop, that whole curve can shift down pretty easily too. So I think it's kind of, I think of it in terms of probabilities is now it used to be the odds of SVXY or XIV going up were greater than 50% because of contango. Now because of backwardation, that shifted over to the long side.
So what are the futures guys thinking? I mean, how do they price this stuff? It must be very difficult. Like yesterday afternoon, I watched them, and all of a sudden, vol goes to 50 or something, and I guess they try to find a happy medium somehow.
Well, it's a great question, and I wish I knew more about it. I think the fact that the VIX gets so far away, it's at 37, and the highest future is at 25. So what that says is there's not a good arbitrage mechanism between the VIX SPX options and the VIX futures. So this just kind of furthers the notion that these two markets are pretty independent. They're not all that closely linked together. So I think most of the market making that happens is they're doing calendar style spreads. So if they have a lot of demand in the front month, they might be hedging that with third or fourth month, using kind of some heuristics associated with that. And you definitely see that curve move pretty much in unison. So you see, you don't see all the action happening in the first 2 months. You see the whole curve shifting with the demand.
Mm. Yeah, it was very interesting to watch. I also noticed that the updates in the VIX actual calculation yesterday seemed to sort of break down. Like it was sort of stuck
Mm-hmm.
at a certain spot for a while. I think it was like
Mm-hmm.
37 point something.
Mm-hmm.
Is that just because the SPX puts are not updating correctly, or is it a breakdown
Yeah.
in
Well, I think one dynamic is that the VIX calculation is done based on a mid price. So it takes the ask and the bid price for the SPX options and just divides that by 2. So if the spread's $10, it would put it at the low end plus 5. The problem is when the options market gets disrupted, those spreads can really get crazy. So you're not, so you might have them really widen out. So your error term, with that mid-price pricing might get pretty bad.
yeah,
So
that's
there's actually an index, VWA and VWB, and what those do is they do the VIX calculation using just ask prices or just bid prices. So that gives you a feel of the range of what the VIX calculation, on a quiet day, that's going to be a pretty narrow spread. And I'm sure it was huge on Friday and yesterday.
I know that I know liquidity really dried up and stuff was really
Mm.
wide. I didn't really want it to update at that point yesterday. Being short, I was
Yeah.
like, oh boy, it was really scary.
Yeah.
So there's been a lot of bad press. There's always, for some reason, there's always
Mm.
bad press in the volatility stuff, but there's been a lot of bad press about the volatility ETF products. And my response to it is that like volatility existed before these products, and this is just another way of
Mm-hmm.
spreading that risk among different people. Now, some people would say, well, the public, is not smart enough to be able to, to manage their own risk or something. But I think that some of this criticism is sort of unjustified. What do you think about all these negative articles?
Well, I think the prospectus on these funds is very clear. So I think we're definitely in the camp of people that basically believe they shouldn't have to read the prospectus and really understand what they're investing in. So on one side, they have not done due diligence. On the other side, these are really confusing products.
Mm-hmm.
And for example, if you're trading Apple, you don't need to worry about the IV price. There isn't such a thing. So the fact that, so this is more generic to exchange traded products, is that they really have these dual markets. You have the underlying, and then you have the exchange traded product. And these are not guaranteed to track each other. There are institutions and people involved or not involved that make a big difference on the prices there. So, on the Twitter streams, I see a fair number of people as, what's an IV price? Where can I find it? I had a discussion last night where they were talking about millions of dollars and they didn't know what the IV was. So, so that's a confusion factor. It's an aspect of these kind of funds that's not well understood.
I mean, just the basic definition and how an exchange traded product trades is news to a lot of people with how shares are added and subtracted, and so it definitely we still have our work cut out for us to educate people on these things. There's no, I mean, you've done a great deal of educating people, and I appreciate you. That's why I brought you on, because
no, I had 35,000 visitors to my blog yesterday, so at Six-Figure Investing. So
wow, yeah, I did it. I did a
so
live.
one thing.
Go ahead.
So one thing I wanted to mention was one of the complaints that was why were they not halted? Because I know there were some people that went into aftermarket, by their measures was after 4 p.m. and were hoping to capitalize on a rebound. And the fact that these funds might have been terminated, they were saying, well, why weren't they halted? And at first level, that seems kind of reasonable, because clearly, there's problems at that point. But when you think about it from the standpoint of dual markets, that you could halt XIV or SVXY, but if you don't halt the VIX futures market, then basically that's a very unfair situation. So, you can't, unless you're going to shut down the VIX futures, which isn't going to happen. You really can't shut down the funds themselves, because that's how they work. So,
yeah, I mean, I think that in a place where liquidity is drying up and the markets are very wide, to like purposely take liquidity out of the market by halting stuff is
mhm,
it hurts the markets. I would
mhm.
say.
But on the other hand, you'd sure like to see some flag. We didn't know till today whether they've been terminated or not. So, but certainly there was a huge divergence between the IV prices and the trading prices. So anybody that was looking at that saw that things were clearly not working well.
Well, I mean, one criticism I heard from a lot of people was that there was no sort of circuit breakers on this thing, and when they started doing these margin liquidation things, people all of a sudden the price went way down. It went from $90 down to 10, and all of a sudden people got liquidated, and it's very likely the price goes right back up, or would have gone right back up, and it was like a self-fulfilling prophecy that stuff liquidated. And if they had some sort of circuit breaker in place, they might have
Hmm.
avoided some of that.
Hmm.
What do you think about that?
Well, I think it's the same sort of situation as if you're tying you're saying this product tracks the VIX futures. Uh, if you halt them and let the VIX futures continue trading, then you're to halt, you're going to be screwing one side or the other. So if you let it run, at least you have a chance of adapting to the situation.
Yeah, it was just a really amazing move. So why is it why is it that they lost value that much from like uh, from $99 to 10 in like 10 minutes
Hmm.
time? We didn't really see the
Hmm.
VIX go up that much at that moment.
Right. It went from 75% to 100%.
Hmm.
So if you look at the VIX Central, if you look at the difference there is, I think what happened was, you mentioned the margin accounts having to cover, but uh, my speculation was that it was related to the leverage funds, the 2x and the -1. They all have to do a end of day rebalance. And this is beyond just the shifting the calendar day mix. This is also, um, if the for a short fund, if vol goes up 10%, then they have to buy back enough futures so that their leverage the next day still matches the long side. So let's say that move amounts to 100. Let's say AUM, the vol goes up 10%. That's $100 million. So that means that fund has to buy back $100 million worth of VIX futures at some point, so that leverage is correct the next day. And you have this catch-22 in the sense of you don't know what's going to close at, so you don't know how much you're going to have to buy back. So my speculation is there was, they got to this 4 p.m. sort of thing. They went to rebalance the funds. There was hundreds of millions of dollars of buying going on in the VIX futures and not a lot of sellers. Which is, that was kind of an aberration this time, because typically when you see a vol spike and the futures are really jumping up, you do see a lot of people selling, taking their profits. But that didn't seem to happen this time around.
No, there was real fear going on, and I mean, I was watching
Hmm.
the E minis trade, and it was going nuts. I mean, there were
Hmm.
there wasn't a sense when you look at, I'm not a big chart guy, but just looking at the chart, it had gone straight up, and there was no pauses anywhere, so there was no real feel of like where this is going to go to.
Mm-hmm.
And
But I don't think there were any. Were there any trading halts in the e-minis?
I don't believe there were.
Yeah,
I was
which is
looking.
pretty impressive for that big of a move. That's
Well, it is a real thick market, I guess. So
Mm-hmm. Yeah.
I figured they wanted to just find its own bottom, which I think
Mm-hmm. Mm-hmm.
is so. some people are. I saw Josh Brown from CNBC calling for like an investigation into all this stuff with the big move right after the close, um, um, and it seems like everything worked as the way it was supposed to, though, to me.
Well, it was certainly ragged. I think that certainly I think it's painful to not know if they're terminated or not. You don't have a price. I remember seeing the IV on XIV was at 20 for a long time after close. Even 5 o'clock Eastern time, it was still high, and then dumped down to $3 and something. So clearly the IV, even the IV prices aren't from the same provider, or there's differences on how those are handled. So it was pretty murky in terms of what were happening, and I think the people I feel the worst for are the ones that were in there trying to snag a bargain in the aftermarket and really got burned.
Yeah, I did have one friend online who he came in, he bought UVXY a couple days ago and rode it all the way up and made some great money, and then he said, "Oh well, I'll turn around and I'll pour this back into the short vol trade now that vol's so high." And he ended up buying XIV, I believe, right before the close at over 100, and he did it on margin, and his stock got margin liquidated away from him around $10 or $12, and that happened to a lot of people, and I feel bad about it too, because people don't understand, and it's hard to address that ahead of time too, because we haven't ourselves seen stuff like this happen before. These products are relatively new to the marketplace.
Right. Yeah, one of the other things that was disturbing is, in a strange way, but the spreads after market looked reasonable. They were not. When TVix was in, when Credit Suisse stopped creations on that, it had a huge spread. So at least that was a warning sign that things were amiss. But the spreads were within 1%, I think, but they were continually falling. So the VIX futures were going down, and these inverse funds were also going down. So clearly, things were not working well at that point. But again, that's a subtlety, unless you're really familiar with these products, you wouldn't. So the fact the spreads were fairly narrow, you would think that they were working correctly.
So now that all these people have gotten burned, does this spell extended higher vol for a while? Because my reasoning for that would be people don't have the appetite to take this risk anymore as much.
Well, if you look historically, I wrote a blog post on this called a better model for the VIX, and what I found was that the model that fit pretty well is that if you have a big spike like this, there's an exponential, fairly slow exponential decay in the average VIX price. So basically, it takes about 200 days for it to get back to for it to drop 68%. So about a 2/3 drop takes about 250 days typically.
Well, I'm still thinking about the put spreads that I own way below here somewhere. Will these big moves, if we get violent choppy stuff for moving forward for a little bit, will that increase the chances for sort of beta slippage, other slippage? Like if vol moves back down a little bit, are we going to see this really decay in price, or is that going to be totally offset by backwardation?
So you're talking about the VXX and UVXY?
Yeah, UVXY price.
Okay. To me the big question is sometimes you'll see a huge collapse in volatility once the fear passes. So people have been buying the dips for a long time, and so so when the fear has kind of passed, and the last year and a half volatility really has collapsed. Now, the question is, have people gotten burned bad enough such that that they're going to stay in this state of anxiety like they did in 2011 and 2009? I think the other factor you have to look at is if you look at the S&P 500, we're just back to where we were in December.
Mm-hmm.
So, so we had this run up in January that's blown off, but in terms of people's portfolios really being clobbered, the general public is not feeling the pain like the vol community did.
Yeah, I think that's a good point, that a lot of this just goes back to where we're deriving from, which is the SPX. If the SPX
Mm-hmm.
it bounces nicely and is
Mm-hmm.
sort of behaving, then
Mm-hmm.
things should decay pretty quickly.
Right.
It comes back to that sort of question we were asking before, which is like, how much does the public who's willing to take this risk affect vol, as opposed to actually just the SPX's movement affect vol? It's
Right.
obviously
Right.
they're both
Mm-hmm.
associated. I have a question from a viewer here. It says, from Edward, it says, what's the risk of SVXY going to zero from here on out? So,
Mm-hmm.
so I guess that would be like, today, does it reset to 80% again? Are we at a higher risk of going to zero now that we've had this move?
It is a daily reset. So it's basically the move from yesterday's final print, which was 4.22. So to terminate, it would have to go down to an 80% drop from that. And so, if you look at VXX and the markets, there's not anywhere close to that sort of a move. Also, you don't tend to get that once VIX is elevated. You going from 30 to 60 is a lot tougher than going from 20 to 40, for example. So the magnitude of the moves. So bottom line, I think the risk of SVXY terminating in the next couple of days is really low, because we've kind of already gone through that fat. Now, on the other hand, remember, we're in backwardation, so it has a headwind at this point. So, people have gotten so used to these funds being boosted by contango, and probably don't realize the status has changed, at least for the short term.
VIX products typically don't stay in backwardation for long. Is that correct?
Well, 2011, it was over 100 days, and I think it was about that long in 2008. So if you get a hard enough shock, 2011 was a 20% correction, and quite a bit bigger than that 2008. So depending on the size of the shock. Now, if we don't have more down legs on the S&P, then I would expect us to go out of backwardation fairly quickly, probably within the next 2 weeks anyway.
Okay, yeah, I feel the same way about it. I think that because I think that futures guys seem to make money on these rolls every day. Are they losing money when we're in backwardation and they roll this thing, or are they just trying to make markets around what they have?
So you mean the people are doing calendar spreads, or what kind of, or you're thinking market makers, or
futures market makers? I mean,
yeah, in my sense is, it's mostly, bid-ask spreads. They're selling at ask and buying at bid. So that's kind of a structural benefit to them. But how they hedge is still somewhat of a mystery to me. And certainly I think they do use the VIX options market, and that was pretty crazy. I think VVIX was over 200 for a while yesterday. So I think that's an unprecedented level also. So those are clearly not cheap.
Well, I just found out that like 2 weeks ago that my old roommate Dahmer was the one of the lead market makers in the VIX futures for like 8 years, up until a couple years ago. And so I'm trying to get in contact with him, because he'll have all the answers. He's like he's a real rocket scientist. He went to Stanford, and he knows everything. So hopefully he'll have some more insight into all that for us. But I think that we have to look at this as an opportunity going forward, because everything's shaken up. There's definitely more meat on the bone moving forward, and this is going to be an exciting time moving forward. I think.
Yeah, I think the people I feel the worst for are some people that kind of felt like all you have to do is buy XIV, and contango will you'll end up good in the long run. And I think just getting blown out like this is really unfortunate. It's it really feels like a risk that a lot of people don't understand, and difficult to understand.
Yeah, people treated it as a proxy for the overall market, and unfortunately, the market's only down. They would
Mm-hmm.
love to have losses of what the market is down,
Right.
as
Mm-hmm.
opposed to this. Um, the thing that comes back to though really is leverage. This is a leverage
Mm-hmm.
situation,
Right.
and
Mm-hmm.
it takes less capital than it does to be long the market for the same amount of leverage. And
Right. Right.
if you're putting a huge amount of capital into it, you do have that risk on.
Mm-hmm. Yeah, you can. Most of the time, you can view XIV or SVXY like a 4x leverage fund on the S&P 500. That it kind of, the betas tend to run in that range. But yesterday you had a 4% decline, so a 4x leverage would have only been down 16%. So the losses were much more severe than that.
So, just while I have you on here, what can we expect next coming up on your website? I've seen some Bitcoin stuff and cryptos.
Uh-huh. Well, I am working on a post that talks about the dynamics between um, the micro and macro dynamics of the ETF. So I see this ongoing confusion about, for example, does supply and demand make a difference on the price of SVXY versus the VIX futures? And I think that also impacts if people want to do technical analysis. If they're looking at the volume of these exchange traded funds, is that meaningful in any stretch? Also, there's been confusion about XIV because it's been trading at a pretty significant premium to its IV price. So I was hoping that's what I'm working on currently.
Is it when we just talked about how it's not very likely that SVXY would go into a acceleration event now that this huge move has already happened? Is it safe for us to put our toes back in the water as far as short volatility at this point?
Well, I think while we're in backwardation, you are definitely playing the volatility. The only thing that's going to work is a volatility collapse. So that's the play. Is if you think, all right, is this all over, and I can safely get back in. But boy, there were some people that really got burned in. There were some head fakes, in this sequence of the last couple of days, and so I've definitely seen volatility spike 3 times. Major spikes in 2011. That was, we really did think, I really did think that it was over, and there was one more major spike that was very painful.
Well, for me, what saved me from completely blowing out, to be honest, was that
Mm-hmm.
I switched to a less risky strategy of I got out of the short calls. I was short some of the March 21, 23, and 25 calls in UVXY, and I was short some
Mm-hmm.
Feb 15 calls.
Mm-hmm.
The Friday, I covered all my Feb 15 calls, and then the Monday in the morning, when we were trading around 16, I just bought in all my short calls, because if you're not naked short options or short actual stock, you can't go negative. So you at least have that going for you. So
Mm-hmm.
if people want to dip their toes in the water, consider, I would say, limited risk plays. That being, how much you can make and how much you can lose.
Mm-hmm.
Spreads can be good for that, like a call spread. You
Mm-hmm.
might want to sell a call
Mm-hmm.
spread, buy a put spread. But because it was not fun for me over this weekend, stressing about this the whole
Right.
weekend, which is what
Right.
I did. Being short
Mm-hmm.
calls was a very scary situation, and even if I didn't have the losses that some people did, I got some more gray hairs, I think, from this one.
Yeah. No, that is very stressful.
Yeah, definitely. Well, listen. So are cryptos done with? I know I talked to you.
Uh, yeah, definitely is a loss of enthusiasm. Will it come back again? Is is another question. I don't think they're done. That's my personal sense, is that it's captured the imagination of a lot of people. If you look back at Bitcoin price history, the time series, there've been some boom bust sort of cycles like this. So,
I mean, nothing like completely as big. I mean, I had two friends at my waiter job who both put like $3,000 into Bitcoin, and the test I'm thinking in my head is, would those guys put additional money behind it at this point? Because that's what it's going to take. If Bitcoin, and this is a simplistic way of looking at it, but if Bitcoin is to go above 19,000 again, somebody has to pay $19,000 for a Bitcoin.
Right.
And so, but one thing that's compounded, I think, losses for a lot of people is that they have spread out into all these other coins as well. You see a lot of people online that have, and the thing is, it worked. There was a period in November, December where it worked. Anything you bought went up.
Right.
But it's not really spreading your risk as much as maybe buying, I don't
know. Yeah, they're probably pretty correlated. That's
totally.
That does remember one thing I wanted to mention is the Velocity Shares has two funds that are XIV and VIX, and they're based on the European futures. So from a diversification strategy, they did not get clobbered anywhere near to what the U.S. ones did. So I think one of the things people should be thinking about is a diversification strategy, because just one characteristic of these short vols is they're subject to massive drawdowns. So some way of diversification. So, for example, a company I'm involved with, Invest in Vol, it has 3 different short vol strategies that are all relatively uncorrelated. So that reduces the odds that you're going to get, the sort of 80% drawdown sort of situation we saw yesterday.
ZIV fared much better than a lot of these other ones. ZIV being focused on a farther out term.
Right.
And people have said for a long time this is a better way to go, and it turned out right in this case, certainly.
Although I think it got hammered pretty hard. I think it's down at 60 or something, isn't it? Or
yeah, let's take a look at it real quick here. I thought the quote I saw was like 50 or something like that. But I'm not entirely sure, but that's better than zero, of course.
Oh yeah, of course.
Let's see. It's trading 65 right now.
So is it trading at this point, because it was halted earlier today? Is there any volume?
Yeah, it's trading right now. I can't see what the volume figures are, but I see time and sale. I have time and sales on the right side here, and it looks like it has some volume. I'm not quite sure how to read volume on this particular product here, is it so? Do you think it's a decent play to just maybe purchase a little bit of SVXY and just put it in your back pocket?
I think that the question you have to ask yourself, if you think macro is going to continue to do well, then yes. If this is the beginning of a major correction, then no. So those are the odds. I always look at these as probabilities. So it's a sense of, and then what's your risk tolerance? I think that's the people that are putting amounts of money they can't afford to lose into these funds. That's not a wise thing to do, or going to margin. It's just not recognizing the downside of these. So.
What about going long volatility right here? Is that a viable hedge?
So that's basically betting on. Excuse me.
No problem.
So that's basically betting on the correction scenario, because if this plays out in the next couple days, then vol will collapse and you'll get burned badly on the long vol side. So it's really kind of a day trader. How good is your sense of where the market's going to go? Is it going to do another down leg or not? Because you could do extremely well on that, but UVXY can, you can be up 30% or down 30% on a given day, depending on how well you pick that. So I think that's the long vol. The only people that I think are successful are ones that just have that really innate good sense of the market and trading. If people go in there and leave it in there for a week, they almost always get clobbered.
I saw some people doing this strategy where they owned both SVXY and UVXY at the same time, and I didn't really see the
They're
point.
long.
They were long both of them. I didn't
No,
really see the point of that.
That makes no sense. No, because the fees are against you. The volatility drag hurts both of those. So the other direction does make sense. Short UVXY and short SVXY in the right percentages. But you have to monitor that. You have to be willing to rebalance that position, daily or even intraday in like the last couple of days.
Okay, so I just have a couple more questions from the feed here. It says, what would it take to get a liquidation of XIV?
Well, it's the same thing where it basically an 80% drawdown. And so you just would have to look at the futures and say, okay, how much, their movement for the VIX gets attenuated. The further out you go, the less they move with the VIX. So let's say you have the front month future that has 10 days to go. It's going to run in the 70% of the VIX move. If the VIX goes up 10, it'll go up 7%. Once you're out into those 6 months, you're talking more about a 20%. It moves about 20% of the VIX. So a 10% move in the VIX is only a 2% move in the future. So it just takes a much more dramatic move to impact the futures curve that far off.
That makes sense. I mean, it would take a VIX move of huge VIX move.
Right.
Move
yeah,
for that
400 or 500%, kind of in that range. That's but I think that's the big learning from yesterday is, this whole correlation between VIX and the VIX futures, it was at 30% at 330 and it was at 100% at 430. So it basically says, these markets are pretty independent, that you cannot bet. Someone on my Twitter feed said, well, it's always going to be about 50%. And I said, well, yeah, a lot of people paid big time, for that assumption. It's not cast in stone. It's just statistics.
I mean, it's a feature of liquidity and what the supply and demand is at that particular moment. And if the demand spikes like it did, those futures will move up as far as they need to go to fill the order.
Right. Well, and I think just kind of, I think a good discipline for traders is you should read Taleb's Black Swan and his Anti-Fragile books, because both of those, I think, are really emphasizing that, we tend to really trust the statistics, but you have to ask yourself, is there a large enough sample size that the statistics are really reliable? And in the case of the short vol trade, we don't have near enough data to make good estimates as to what a 3 sigma move really is.
I'm going to put that book up on the screen for a second so people can see what you're talking about. New York Times bestseller, Black Swan. There we go. Just so people can take a look at that. And there was one more question here for you. Let me see if I can pull it up here. Can we expect similar value thresholds before an SVXY split? So I guess that means if it goes up higher again, when will it split again? I don't really...
Well, historically, it's needed to be above 100 before it did a split for SVXY.
Yes.
And both UVXY and SVXY, UXY and TVix, I was projecting we would have reverse splits in the next couple months, but that's, if they haven't already put that in motion, that's not going to happen for a while. They'll hold off.
Yeah, they're not going to need to right now, huh?
No, no. UVIX typically doesn't reverse split till it's down and below 10, so it's going to take a while before it's back in that range.
Yeah, everybody was calling for the reverse split, and it's not going to happen
Yeah.
anymore. So TVIX has halted before.
Well, it was halted this. I don't know if it was halted this morning or not.
Okay.
I think it was, at least in the morning. I don't know if it's resumed. If XIV is resumed, then I would expect TVIX probably has resumed also.
So XIV didn't have, like, the thing I was trying to explain to a lot of people yesterday was that SVXY and UVXY kind of hedge each other to a large extent. They're two sides of one coin. With XIV, there isn't really another side. There wasn't really another side to that coin, was there? Or was it
Velocity
TVIX?
shares does. Well, Velocity shares does have the long funds also, but size-wise, they've never gotten the size. So, but it does have the TVIX. There's the TVIX versus XIV, and then ProShares has the UVXY versus SVXY, and they also have, I believe, the single leveraged long fund, and it's got decent size. I think people are attracted to the ETF nature of it at lower credit risk. So I think it's a respectable size. So I think that does help them some on the daily roll when they're moving some percentage long versus front month to next month future. They can ProShares can just do that internally, so they don't have to even go to the exchange. They can just move futures back and forth between between SVXY and UVXY.
It's amazing that the ETN failed, but the ETF did not. I mean, you would think that an ETN gives you more options somehow.
Well, I was reading the prospectus last night, and they said it was extremely likely XIV would terminate if it went more than an 80% move. And so what that makes me think is this was written into the swaps.
And these guys, I saw volume figures that said that Credit Suisse, like separate of all this, owned like 30% of this fund themselves. And although the spokeswoman was saying there's nothing happened to Credit Suisse, of course they're going to say that, and they might have internalized some of this swap stuff and just taken the risk themselves, as trading firms sometimes do.
Yeah, I don't think so.
No,
I think that they're a bank. They have more of the banking sort of mentality, and what I saw from TVIX was they had risk managers that were overly conservative actually. So that's deceptive when you go look at the holdings. Barclays will be the same thing. You'll look and you'll see they have large positions of VXX, for example. And you just say, well, aren't they getting killed with contango? But they've hedged those. So, they're I think what that is kind of buffer for creation or redemptions, so that they don't have to go through, because I think they actually have to file to increase more the total number of shares that they can have outstanding. So I think they hold those internally and hedge them internally so that they don't have any directional exposure. That's my opinion on that. But I'm sure Zero Hedge will be all over that. So that's
the conspiracy guys.
Yeah.
All right. I have a question also from someone that says, how might the collapse of AUM in the space change the way VIX futures trade?
Well, in a way it was symmetrical because I'm sure UVXY and VXX had dramatic moves up in AUM. So I think it's the long side has gotten more heavily weighted. But I think as a percentage of, I still believe the VIX futures market to be a very liquid market. And I think that at $3 billion, I think that this is not enough to really drive the VIX futures. That's my opinion.
It appears that XIV has reopened now.
Well, it might be trading.
Yeah, it's trading now. It's trading now. 582. It looks like it reopened about a half an hour ago.
Okay, that's interesting.
That's a great point, though. Because I know when we talked before, you were saying that when you talk to people, they felt that they could get to 3 times the size they are now and still have liquidity to trade the VIX options, and so that there's enough liquidity out there to support what we have moving forward. So that's good to hear. I think it might have been reduced slightly by yesterday as far as people that are willing to go short, but
yeah.
as far as the people that some of the people that lost yesterday are people that didn't understand what they were getting into, and that's what makes it sad for me. So I never want to see people when somebody comes to you and asks you to explain the products to them, and they're just getting into investing and they're excited about a new product or something.
Right.
It's very hard to see them lose out like that. You really you root for people when they're learning about this stuff. They they take the time to look up your website and do their own research. You kind of root for them. So it's a sad moment for those people. But I want to thank you for coming on and
Sure.
giving me a little bit of your time. People kind of need to be walked in off the ledge a little bit right now.
Yeah. No, and it's a very confusing area.
Well, you've certainly made it a lot simpler for me.
Oh, good.
I appreciate it. And good luck moving forward. Did you have exposure yesterday?
I did, but I think I mentioned last time that I use puts in conjunction, so those worked well.
Okay.
And so I ended up for the day, but that was
great.
But overall, the SVXY holdings I'm flat for the quarter, so that's
yeah. So Friday was a little bit of a negative one.
Selling a couple of weeks earlier would have been much better. That's
I think my dad had to buy a new roof, and so he sold some stocks to buy a new roof, and and right before everything happened, so he was happy about that.
Yeah,
it's funny. And we started watching Hinterland, so thank you very much
for
that suggestion. We love the British TV. I'm going to take a trip to England in April.
Okay,
so
great.
We'll get to watch lots of British TV.
Yeah.
Anyways, thanks for coming on, and
all right.
Good luck to everybody moving forward. Thanks for watching, and we will see you soon.
All right, sounds good. Thanks.